All right, welcome back. So what I want to talk about in this one is a very important rule of mine, which is actually responsible for a lot of people who lose money. Like, a lot of people who lose money are losing money because they don't follow this very simple rule. And, I just want to talk about it here. And also, I just want to point that out because I'm talking about a lot of random things in the first section of this course. We're going to get more organized later because I just want to point out some really important things before we get into everything else, because I want to talk about tools in the next section, and then we're going to talk about market moving events, and then we're going to talk about trading mindset, and then we're going to get into technicals and all that stuff. So, that's where you actually make the trades, understand how I make trades and stuff like that. We're going to go through it pretty quick, but I just want to point that out that I want to share some really critical information before we get into everything else. All right. So with that being said, I want to talk about my 30 minutes rule. It's a very important one. The idea with this is that when the market starts, when the market opens, right? In the beginning of the market, probably usually the first 30 minutes, there's a lot of movement. There's a lot of volatility, and that volatility is source of a lot of bad trades and lost trades. So, and this is something I learned the hard way. I didn't find it out from someone or anything like that. I just made a lot of bad trades and realized, hey, maybe it's not the best idea for me to day trade in the first 30 minutes of the market. And when I did that, this was years ago. When I did that, I realized, this is actually a really great idea. I could wait 30 minutes when the market opens and see the direction of the market, and then just take action. It's so easy, right? Take a look at this, for example. I'm going to show you this. This is SQQQ, right? This is what I trade, SQQQ and TQQQ, based on how I feel about the market, how the market is going. If I would trade in the first 30 minutes of the market, this is right here. This is 6:30 opens for me. I'm in California, and 7 is the first 30 minutes. Take a look. If I would trade, I would incorrectly, obviously I have a system, but incorrectly I could assume that the market is going down. That means the SQQQ is going up, right? But obviously, again, I'm using a algorithm and I use my own private indicator called golden slope, so I kind of avoid these losses anyways. But I just want to point that out here. Take a look. So yeah, I could incorrectly assume that the market is going down. That means SQQQ is going up. Let's look at the TQQQ here real quick. Look, so I could incorrectly assume the market is going down, right? And hey, I could just bet against it, and I could just or I could mess up, right? Bet against the market, short it. And if I would short it, the market would go up for the rest of the day, which is today. And then, oh my God, I would lose so much money. See, guys? This is why I don't trade in the first 30 minutes of the market, because the direction of the market is not clear yet, right? And again, this is up to you. This is a risk you can take if you are comfortable with taking risks like this, but I don't, okay? And I wait the first 30 minutes. This is my rule. You can go by it or not, up to you, but I just want to share this because this simple thing made me a much, much better trader. And I'm sure it can make you a much, much better trader. Alright guys, just pointing it out. So yeah, I just want to share this with you guys. Pretty much the last video of this section, because we're going to get into more technical stuff in the next video. So stay tuned. Thank you so much. Let me know if you have any questions, and I'll see you in the next one.